Welcome back to the channel. My name is Patrick, and in today's video I'm going to show you something I know you're going to like. I know most of you like trading with the trend, so I'm going to show you in this video how to find the beginning of a trend. If you find this useful, hit the like button. If you want to see how I progress, hit the subscribe button and support the channel. Let's get busy.
Okay, I'm going to try to keep this as simple as possible so no one gets lost. It's a very straightforward setup and it's something I've been rocking with last few days. I've been in the lab, I've been back testing, and I really like this setup. It's all based on supply and demand again. We've talked about it before. I showed you how to do it. Let's see. It's visible. This setup is visible on a higher time frame. For example, we're on H1 here, yeah? We have a push down here, pull up, a push down here. Okay, that's a breaking structure. So remember I talked about a pole and flag. So here's our first pole. There's a flag, second pole. So you want price to come back to roughly about 50%, and you can sell there. You can sell here, and then you're looking to potentially continue the trend. So that's it visible on the H1 there. And I showed you on the M15 when I was scalping this trend here, entries based on the M15 to get these trends here, right? What I'm gonna do now is show you on M5. Now the reason I like the M5 setup, or I've been working with it recently, is because it's visible on a daily basis. You could catch this scalp on a daily basis. On H1, you get a bigger move, as you can see. You get a larger move, okay? So pole, flag, pole, pulls back up here. If we enter roughly around 50% of this down push here, so roughly here, we enter there, we're looking at a much bigger move. This is about 70 pips. It runs all the way down to 91 pips. I probably would have got out here 50 pips because this is the demand zone that could bring it up, which it did. So that runs about, what was that, 50 pips, yeah? So on the smaller time frame, we're being more modest. We're not looking for a big move at all. We're looking for a quick scalp, okay? And this is available on a daily basis. So this is why I like this, because it's a quick scalp. I could get in and out. I could make 1%. I'm not sitting around waiting to see if it goes to TP. I'm not sitting around waiting to see if news is going to take me out of my position. I get my move and I'm out, okay? So I'm going to show you a few examples really, because like I said, it's on a daily basis. If you stick around to the end of the video, I'll show you the example that I took this morning, okay, based on this price action here, okay? But I'll show you that in a second. So one thing I want you to take into account when I show you examples, yeah, I'm not looking for the best example of this. I could literally scroll through any of these days here, and I could show you examples. So here, there's an example of it here. Do this day. Where is that gone? Okay, so here it is. Okay, so what we're looking for is a pole, a flag, a pole again. The same thing I just showed you on the H1. Okay, so no indicators needed because this is very simple, straightforward. You just look at the price action here. Okay, so what we had here is price was trending. This is the Asian session. Now, I don't trade this session at all. I trade the London session because it works with my schedule. So I trade the London session, and I don't trade based on information on the previous session because it could easily reverse, which is what happened here. Okay, so we had the Asian session here. We had the pole, we had the flag, we had the pole. That's the beginning of the trend. It pulls back into this zone here, and we're looking to enter either at the open or 50%. Okay, so let me zoom in so I can show you what I mean. So here's our first pole, here's our flag, a second pole. When it pulls in here to this zone that broke this structure that created this pole here, I'm looking to enter. Okay, so 50% would be 50% of this move here. So you could get a fib tool to mark it out from here to the top to find 50%, or you could just learn how to do it without tools, which is what I've been working on. So my entry is based on this pivot point here, this top here, okay? Because it broke out there. So some of you may know this as a break and retest even. It broke out there, it comes back in there, it holds on that pivot point there and pushes it back out. So some people refer to this as the open or the breakout point. Some people refer to as a break and retest. It's all the same thing. Doesn't matter. Pole, flag, pole. Enter roughly there. Our stop loss is going to be beneath the previous flag. Okay, so stop loss is beneath the previous flag, and then we're looking to basically just take it from here to push out to create another pole, right? We don't know how long that pole is going to be, so our move is roughly about there. That's 3 pips, okay? It does go a lot further. I'm going to talk about TP, I'm going to talk about risk management, I'm going to talk about stop losses in a second. I just want you to see the move a few times so you know what we're looking for. Pole, flag, pole, flag. I want this second flag, okay? So not this one here, this second one, because this is the trend being established. This is the start of the trend. Pushes up, pulls down, pushes up. Now we may have a trend. When it comes down here and respects this low, that's our trend. So when it comes down here, I'm getting in there. Hopefully it respects this low and goes off, right? That's how we want it. And in most cases, it does respect this low, but in some cases it doesn't. It may want to pull into this zone a bit more. So in terms of stop losses, my preferred stop loss would be here. Okay, it would be underneath this zone here. So in this situation, I am looking at a 2 pip stop loss. Okay, however, the best place to place it is underneath where this whole reversal attempt started. Yeah, so in this situation, the stop loss would be 8 pips. Okay, now in terms of TP, if it respects this zone here, my TP could just be based on this move here, doing a 1-to-1, okay? So if it respects this zone here, I've got in here, my risk is 2 pips. I could do a 1-to-1 and get 2 pips, 2.5 pips it was, right? And get out there, okay? It's not a lot. However, if you were to put the right amount, say like if I had if I put, let's just say I put 10 standard lots on that, that's 2000 no, yeah, no, 250 dollars just from 2 pips, okay? That doesn't include spreads, nothing like that. So you may want to take that into consideration. If you want to cover your spreads in the move, maybe you let the move run a little bit longer, go to a 2-to-1, and that will give you $500 just on 5 pips, okay? So it really does depend on how you manage your risk. I tend to use risk about 1% for these moves. So if I'm being conservative and I'm placing my stop loss underneath here, and that's 8 pips, and I've got say like a 60K account, that's roughly about $800. So that's on 10 standard lots, that's $800. So I wouldn't use $800. I use about I wouldn't use 10 standard lots. I use about 8 standard lots. So roughly that will be about 1% risk. And if I want to go for a 1-to-1 from here, I need another 8 pips, and our 8 pips would be roughly here. Okay, yeah. So that would be a 1-to-1, and I made 1% on the account. And as you can see, it went a bit further than that. It did roughly about 2-to-1, and you could have made 2% just on that move. And this is based on the Asian session price action. Okay, that's what it did. I wouldn't have traded the Asian session. I would have traded the London session, and as you can see, the same move was available. Okay, so let's do this again. So we got here, so we're pulling up, we pulled up, flag down, pulled up, flag down, pulled up, flag down, pulls up, flags down, pulls up. However, here it doesn't, when it flags down, it actually breaks this structure, it breaks this low here. That is a potential reversal, okay? To confirm that it's reversing and it's trending down now, we need price to pull back into that zone where it broke from and respect it, and then start heading back down, creating the start of a new trend. So as you can see, it pulls down here, consolidates a bit, tags in, pulls back up exactly on that point. As you can see, I mean, I'm not messing around with this video. There's a lot of value in this. No indicators at all needed. And if you backtest this, you'll see how consistently you could find these entries. So pulls down, flags back up, and we could enter here. However, the best thing to do is wait for it to pull out again. That is the beginning of a new trend, okay? So it pulls out again here. So what we're waiting for now from this point is price to pull back into this zone. And again, you could do 15% mark, so roughly around there. You could do the open or the breakout point where it broke out from. So it broke out from this zone, from this pivot point here. So you can enter there, and stop loss is just above this last flag. So that's our first pull. That's our flag, first flag. Our second pull, we want it to come in, and we're riding. Our move is on that third pull down. Okay, so we're catching the second flag and we're trying to ride it down. Okay, so that's the move there. That's our stop loss. In this situation, we are risking 7 pips, and if we do 1-to-1, that's quite easy. We get our 1-to-1 from this point here quite easy. That's 26 pips. We've got a 1-to-1 here, so you can make 1% on your account just from that little push down. Okay, and that would have been near this candle was the beginning of the London session. So that was quite simple. I did take this trade, and I only scalped it. I tried to leave a runner, but it came back. It's very close, and I think I closed the runner. But anyway, so as you can see, it gave a 1-to-1, it gave a 2-to-1, and it gave a lot more. So 7 pips on 80, what's that, 10-to-1? Okay, quick maths, 10-to-1. Seriously, what are you talking about? I think that deserves a like. So if you find value so far, hit that like button. But I got more for you. I got more for you. So this is what I've been rocking with the last few days. It's available on a daily basis. You can make 1% using this strategy depending on your risk appetite. You can make 1%, you can make 0.5, you can make 0.25, whatever you want to do. Maybe start off slow, get used to the routine, get you used to finding the entries, and then you could pick it up from there. However, this is what I've been working with, and I'm going to show you more examples. So consolidation down here, pushes up. Can we see that? Yeah, we can see that. It pushes up, flags down, pushes up. We're waiting for it to flag back into here. It doesn't. It's too aggressive. It pushes up again. Now, this is on M5. If I went to M1, you probably can see it does push back down here. This breakout here, this candle is a push back into this zone, and you could call that. You can do it on M1, you could do it on M5, you could do it any time frame, as I've shown you multiple times. I prefer M5, okay? The reason is the M1 time frames gives you too much information, and a lot of times the zone gets broken because it's referring to a higher time frame price action. So for me, M1's just too risky, and then with the risk to reward, you're using tighter stops, maybe 1 pip or 2 pips, and it's so easy to get taken out. And to make a decent return, you're leveraging way too much. So for me, M5 is my preferred way of doing it. So pulls up again, flags here, pulls up, and we've got our first entry there, roughly, okay? As you can see, it pulls in there, it hits the breakout point and goes from there, yeah? So that could have been your move for that day. 1-to-1, stop loss is underneath here, 9 pips is our risk. a 1-to-1 is easy there. Okay, as you can see, again, let's zoom out, it goes a lot further than 1-to-1. So what I've been doing is taking 1-to-1 and moving to break even. Okay, it doesn't always go and do a madness like this. I give you 80 pips. It doesn't always do that. We don't know what price is agenda is, and also all we do know is it's heading somewhere, and when it gets there, wherever it is, it could reverse. So if we zoomed out, we could probably make a fair assumption and see where price is going. Like this here, I'm sure if I zoom out more or go to a higher time frame, there's a supply zone above here. Okay, so it went from this demand here, pushed up, hit the supply zone, it beat it, and it tapped into a higher demand, higher supply zone on a higher time frame. Okay, let's just quickly mark that out, just to be sure. So I just got one more thing to show you, and I think I'll wrap it up. So yeah, that's the high there. If I look on the daily, it's probably there. Yeah, on the daily, there's the supply zone. It hit on the daily and it came down. It's the same thing on any time frame. Okay, so it just depends on how you like to trade. I like to get my moves on a daily basis. I like to get in and out as quick as possible, so I'm not really referring to daily or H1 as often now. I'm looking at M5. I'm trying to get this small move and call it a day, okay? Because I know one of my biggest problems as a trader is over leveraging and over trading. So to address that, I'm trying to manage my risk, and I'm trying not to trade too much, and this is helping. This strategy works for me. Okay, so here's the bonus. I'm going to show you the setup this morning. I took, and I'm going to show you how it played out. So we had, where was it? Okay, it was here. Yeah. So we had a little trend up here, okay, from the Asian session. Okay, we had our pole, our flag, our pole, our flag, our pole. Okay, so I was asleep during this session. I'm not trading it. I don't care about that. I woke up and this is what I saw. This is what greeted me. So I saw a pole, a flag, a pole, but it didn't break out. It reversed and broke this trend by beating this low here. Okay, so let's just mark out this point where it failed to continue this uptrend. Okay, so it reversed and broke the structure here. Okay, so that's our first indication that this is a reversal and it may be going back down. So what happens? What I need now, that's my first pole, that's my first flag. I need another pole out. So as you can see here, it pulls out. It doesn't go far, but it does pull out. Okay, it beats this last low. So we have a pole, a flag, a pole. So there's a low and there's a lower low. Okay, that's a trend, right? So what we want now is price to pull up back into this zone here, roughly 50%, or you could do it at the open. I did it at 50%. Okay, I got in there and I wanted to place my stop loss just above here, but this is a good example. I wanted to place my stop loss just above here, but I said to myself, that's way too tight from my entry. That stop loss would have been about 2 pips, 3 pips. I said that's way too tight for my entry. It was approaching a new hour, so it was about a new hour's coming. So that I had a feeling it could tag back into that zone again, which it can. It could tag into this zone multiple times. So it could tag into this zone, this price action multiple times before it goes, which is what it did. So I had my stop loss above this guy, which is the start of the trend. As I said to you, that's the best place to place the stop loss. Okay, if it breaks this guy, it's probably reversing, it's going further, so on. Okay, so I have my stop loss just there. So I had a 5 pip stop loss here. and I was looking for a 1-to-1. So from my entry, which was here, five pips, I got that there, okay? So that was quite simple, straightforward. I got my 5 pips. I was already out here, by the way, because I had a lot of size on it. I made my 1% and I left the runner, okay? So I was out there and I got my move. So when price, the reason I got out here, it was about 4 pips. 4 pips. The reason I got out, what was it? It was about here, 4 pips. I made 1% on 4 pips and then I got out, right? I left the runner and I got out. The reason I got out here is because price could be pushing up further, which it did. It pushed up a lot further and it would have taken me out if I stayed in. But also, it's not just because of out of fear I got out, it's because what I identified was this demand zone, this unused demand zone here, okay? So this demand zone had not been used. So price did tap into it from the open and broke out, but it could have come back to 50%, which would roughly have been here, and reversed from there. And as you can see, it tapped into it, respecting that low, and then it pushed up from there. Okay, so that's why I was looking for a scalp. That's why I do scalp these moves. I can hold them for longer, but we don't know when price is going to turn around from. Okay, we don't know if it's reached its agenda, and in this situation it hadn't. So that's why I couldn't get it to go further down. What I was looking for, so I took my scalp, that's what I was looking for, got my scalp, and I left the runner. And the runner, what I was looking for was price to just continue what it was doing on a higher time frame. So as you can see, pole, flag, pole, flag, pole, flag. It respected this zone here and pushed it down. I was hoping it comes back to this zone here where my entries were here based off this imbalance and to push it back down. As you can see, it's broken it and it's tapped into this zone, and it can still come down. I do believe it still comes down because what I'm seeing here is a lot of demand zones here that's being used, and I'm seeing prices really trying to break structure and move to the downside, and where it could reverse from this demand zone. This is how I read the charts, all based on supply and demand. But what I've identified now is how to find a way to trade on a daily basis to get my 1% or 0.5% on a daily basis in and out and end my trading day, which is what I've done, and that's why I've been spending the time sharing this with you, getting this video out to you. Has been a bit of a long video, but as you can see, there was a lot to cover. I did give you a lot of examples, and I think I've covered most of the things I wanted to discuss. If you do have any questions, hit me up in the comment section and I'll get back to you as soon as I can. I think I covered everything, and I hope you've appreciated this. If you did, you know what to do. This is Patrick signing out, and on to next time. Peace.